business stories live from the Sky News City studio. Sweden's Riksbank becomes the latest advanced economy central bank to cut interest rates this year, with a decision due from the Bank of England tomorrow. Engineering services business Wood Group becomes the latest UK company to attract a foreign takeover approach. Plus, why the hugely influential Texan Creativity Festival, South by Southwest, is coming to London. Good afternoon, this is Business Live with me, Ian King. This time tomorrow, we will know whether or not the Bank of England has decided to cut interest rates from their current 16-year high. But today saw the Riksbank, Sweden's central bank, cut its main policy rate from 4% to 3.75%. It's only the second time this year that an advanced economy central bank has cut interest rates, and follows a similar move from the Swiss National Bank in March. Well, the move, which was Sweden's first interest rate cut in 8 years, is seen as being significant because Sweden's economy has behaved similarly to that of the UK during the last year. We'll have some reaction to this later on in the programme. Well, that's tomorrow. This Friday should see confirmation that the UK has emerged from the shallow recession it entered last year. And there's fresh evidence for that this morning in the latest Small Business Index report from the Federation of Small Businesses. It reveals that the balance between small businesses that feel confident and those that do not has gone positive for the first time in 2 years. Taking away the volatility seen in the COVID period, it was the first rise in small business confidence seen since 2018. Well, manufacturers were the most positive about their prospects.
We're really quite pleased that small business is telling us, look, we're feeling a bit more confident, the economy feels more stable, and if you look at their growth and revenue prospects for the next quarter, that's the big difference. So 4 times as many small businesses say that their revenues will be greater than those who say they'll be less. Similarly, twice of those who say that they will see growth, twice as many will say that they will see growth than say the opposite. So we're looking at this going, actually, small businesses are beginning to feel economic benefit. Consumer demand is OK, and the economy feels more stable. So because of all these things wrapped together, we're saying that actually we think, for the small business community, the shallow recession is finally in the past.
Some other stories for you now. And Wood Group, the FTSE 250 engineering services business, has become the latest UK company to attract a foreign takeover approach. Wood, which employs more than 35,000 people worldwide, said it had an approach on Tuesday last week from the Beirut-based engineering consulting group Sidara, valuing it at £1.42 billion. Well, Wood, a major contractor to the world's biggest oil and gas companies, said it had rejected the offer because it fundamentally undervalued it and its future prospects. Well, the news comes just over a year after Wood rejected a £2 billion approach from the US private equity firm Apollo Global. Well, speaking to me on this programme just over a month ago, Wood's chief executive Ken Gilmartin was upbeat about the company's growth potential.
We're growing everywhere. You know, we are a net headcount accretive business, and as we're continuing to go on this growth strategy, which we delivered really well on last year, we're going to see increased headcount. We're seeing it here in the UK. You know, we've got 500 open positions right now. If the universities here could produce more engineers, we'd be able to have work for them immediately. In the Americas, in the Middle East, in our global engineering centres, I'm thinking of India, I'm thinking of Colombia. So really, it's a fairly consistent picture across the planet right now.
Wood Group shares right now currently trading just north of 16.25% higher on the session. Government has awarded a £196 million grant to build the first next-generation nuclear fuel facility in Europe. The grant, to the Anglo-Dutch nuclear fuel consortium Urenco, would see a uranium enrichment plant built in Capenhurst, Cheshire, and support 400 jobs. The government said the facility, due to begin producing fuel in 2031, would put an end to Russia's current position as Europe's only current commercial producer of so-called high-assay, low-enriched uranium. Brewdog's co-founder James Watt is stepping down as chief executive after 17 years. He'll be replaced by the company's chief operating officer, James Arrow, but will remain on the board. Well, the brewer and pub operator was criticised in January for announcing it will no longer hire new staff on the real living wage, but instead pay the lower legal minimum wage. And the fast fashion retailer Boohoo said this morning it was positioned to return to growth after reporting a drop in sales and a widening of full-year losses. Boohoo, whose brands include Karen Millen, Coast, Nasty Gal and Pretty Little Thing, saw pre-tax losses widen to £159.9 million in the year to the end of February, which was up from £90.7 million in the previous 12 months. But the company, which also owns the Debenhams brand and website, said that following a year of high inflation and weakened consumer demand, it was starting to see an improvement in performance in some of its core brands. The shares are currently off by 0.25%. Now, hiring clothes is nothing new. It's more than 125 years since Alfred and George Moss launched a formal wear hire business from London's Covent Garden. But fashion retail rental has become big business in the last 5 years. And now the UK's biggest rental platform, is hoping to take it to the next stage. It's offering a new service, offering customers the chance to rent a number of items for an extended period of time. Well, with me now is Victoria Prue. She's the founder of Victoria, welcome to you. Is this a response then to changing consumer demand?
Yes, absolutely. We are 5 years into the Her journey, and we've seen this massive shift from people not only renting sequin party dresses, which I think people assume rental fashion to be aligned with, but actually shifting much more into the elevated everyday space. We now have women across our platform and across the UK renting everything from sunglasses, statement outfits, suits, everything in between.
So how long is the current typical rental period?
So you can rent from 4 days up to 30 days, and we've seen this big shift from rather than 4 and 8 day rentals, which is kind of fueling that occasion wear model, actually customers renting, say, a sweater or a jumper for 30 days, which has been a really interesting shift that we launched just before Christmas now.
OK, why do you think that is? Why are people looking to rent for a longer duration?
We're 5 years into the journey, and I think a bit like Airbnb and Uber, we've seen this massive shift in the sharing economy space. Fashion was the next big market that we're trying to tap. So I think as consumers become more familiar with rental businesses and they become new and understand the concept, actually it's a lot less scary. So they typically rent for a dress for 4 days. Once they've done that for the first time, they'll come back and rent many more things for 16 or 30 days.
And what's the profile of a typical customer these days? Has it changed much over the last 5 years?
So we're majority women's wear focused, millennial, with a massive Gen Z audience. But we have customers from 18, I think our oldest customer was 87. So we have a real spread across the women's wear market here in the UK.
What did the 87-year-old customer rent?
She rented a dress for her granddaughter's wedding.
Lovely. Are you going to charge more for this service, appreciably?
We made it really affordable. In a cost of living crisis, what our customers didn't want and don't want is a subscription to fashion. So for £99, you can unlock with Her Flex £170 of retail credit. So we've made it super affordable so that people, if they're reading this and watching this and have never tried rental before, this is the chance, and we've made it super affordable to do so.
So emphatically, it's not a subscription service?
It's not a subscription service. It's much more like a kind of class pass credit scheme, which is what, as a kind of response to consumer demand here in the UK.
Who do you benchmark yourself against?
If you look at the US, they're always kind of 5-10 years ahead of trends in the sharing economy. Rent the Runway and Newly are the two big players. Newly turned profitable. It is the Urban Outfitters owned fashion rental platform earlier this year. So we've seen this massive growth in rental and resale too. So we're venture backed by Octopus Ventures, the early backers of Depop, and have seen similar growth to the resale platform there.
So do you see yourself more as a tech business or a fashion business?
Yes, we are absolutely a tech-first business. We built the business from line one of code, my co-founder and I, 5 years ago. And we are as technical as an Airbnb. Everything is peer-reviewed, and also we're not limited by scale. We don't own any stock at all. So across 60,000 units that you can rent across the Her platform, we own zero inventory. So we're super scalable from that point of view too.
Asset light in the jargon.
That's the plan.
What do you make of... I mentioned just before we started this segment with you, Boohoo's recent travails. I mean, obviously, everyone's finding it a lot harder at that end of the market, thanks mainly to Shein. You're obviously going for a more upmarket demographic than they are.
Yeah, we'd like to put fast fashion out of business. Rental exists to try and extend the lifespan of clothes. What we want to do is take the fashion industry, which typically operates on the linear model where you buy something and then dispose of it once you've worn of it, into the circular. So trying to embrace circular at scale is exactly what we're trying to do at Her. Rental, resale, repair, all of the R's that form part of circular is the single biggest opportunity for retailers out there.
Now, you're only in the UK at the moment. Do you see yourself going international at some point?
Yes, absolutely. The plan over the next couple of years is to build what will be the global home for circular. We're UK only now, but we'll be expanding soon.
So will you need more capital to do that?
Absolutely. Every year, the venture-backed cycle begins and ends.
All right. Victoria, great to see you this afternoon. Got to leave it there.
Thanks for having me.
Thank you. Now, for more than 30 years, South by Southwest has been America's biggest festival, bringing together the worlds of film, music and technology. And next year, it will be coming to London. It's only the second time the event has expanded beyond its home in Austin, Texas, having launched South by Southwest Sydney last year. The event will take over dozens of venues, galleries, clubs and other spaces in Shoreditch in East London, which has been selected as it's a centre for both the tech sector and for creatives. Well, joining me now is the Managing Director of South by Southwest London, Randall. Brian, Randall, welcome to you. What took you so long?
I've been a massive fan of South by Southwest for over a decade of my career, and I've been desperately thinking about how we could bring it to the UK. So it's been a work that's been incubating for a little while, but we're finally going to be here. We'll be bringing it to London in June 2025.
What did you learn from the launch in Sydney last year?
I think what we learned was that there's a huge appetite for South by Southwest across the globe. You know, it is a destination for some of the world's biggest thinkers to come together to really debate and inspire ideas that are going to, perpetuate our future. So I think we learned that there's a huge appetite for it. And we also learned that you can do South by Southwest with your own kind of unique local flavour and unique local flair. And I'm really excited about how we bring London's creativity to the fore through this festival.
Of course, obviously, the original South by Southwest has done wonders for the local economy in Austin. I mean, London doesn't really need a shot in the arm like this. Wouldn't this have been better taking place in somewhere like the southwest of England, like Bristol, say?
Yeah, look, I think South by Southwest in London will absolutely be an open-armed embrace to all of the brilliant creative industries across the UK. We are looking at how we can collaborate and feature all of the biggest platforms and thought leaders across our market. I think London plays a really unique destination as a cultural melting point, or a connection point, if you like, that everyone feels like they can come in and actually share their kind of enthusiasms and inspiration. So I think it's uniquely placed in the global environment, but also a destination where we can absolutely celebrate the rest of the UK's creativity.
Now, buying an official badge for South by Southwest costs nearly $2,000. What will you be charging in London?
So we're looking at various different pricing strategies. I think the nice thing and the unique thing about South by Southwest is you can buy passes that match your enthusiasms. So it is a celebration of music, it's a celebration of technology, it's a celebration of the screen industries, everything from film, TV and streaming. So you actually have the access and the ability to kind of focus on an area of your interest and specialism, or you can apply what they call the Platinum Badge, which gives you access to everything the festival has to offer. So we're hoping that a similar strategy will allow us to make sure that we're affordable to people at different sectors of the industry.
It's early days, but how are you going to put a sort of Union Jack on this, as it were?
Yeah, I think that we absolutely need to make sure that we bring some of that American AAA stardust. South by Southwest is famous for having incredible names. Barack Obama, Michelle Obama have been there, Melinda Gates, Al Gore talking about the future of sustainability. So we absolutely need to make sure that we bring some of the global thought leaders to London and to Europe. But we also need to tap into those local stories and find out what's important to new innovators within our market. So it's that blend of, real global superstars and super talent, and also who's next, who's actually the voices that need a platform like South by to really demonstrate their visions of the future.
Do you think Rishi Sunak, or, well, it could be Sir Keir Starmer by this time next year, they're not really going to have the pulling power that Barack Obama did, are they?
I think that the UK has an incredible history to celebrate and incredible stories to share with the world. We have an exceptional range of creative talent that will be welcome in South by Southwest. So I'm really excited about the portfolio that we'll be able to present.
Now, New Order played South by Southwest last year. Any plans to bring them out for this one?
I was there for that gig, actually. It was a brilliant experience with UK House actually going over and bringing some pioneering UK talent. So I'm hopeful that we'll have a similar scale of artistry presenting at South by Southwest London. But we're also a European festival. So I'm really, really excited about those European disruptors and musicians that perhaps I've never heard of. The unique thing about South by is it really is a destination for discovery. So if you are a curious mind and you're trying to figure out what's now and what's next, you can also go there and discover new bands and new acts.
And in terms of tech businesses and startups, if they want to get involved, how do they get in touch with you?
South by Southwest London.com is our destination. You can find out so much more about what we're planning through that platform. I think what I would say is that South by Southwest has always played such a unique role in launching tech startups. If you look at the history of the platforms that have been launched at South by in the US, you've had everything from Twitter, now X, Uber, Airbnb. The companies that have been able to pitch at South by Southwest in the US have gone on to raise £23 billion in kind of investment. And so it just shows you the power of a brand like South by Southwest to really launch and perpetuate those new businesses.
Well, I think everyone would be pleased if you raise half that this time around here. Randall, best of luck with it. Hope to see you again before the event. Thank you.
Thank you so much for having me.
Still to come here on Business Live, we'll have a look at how the markets have ended up this afternoon. Another all-time high for the FTSE. Don't go away.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. Alex Crawford joining us now from Ukraine.
Their personal possessions are all scattered around the place.
Our economics and data editor, Ed Conway, try and make sense of the big numbers for us.
Things can change incredibly quickly, and that's what they have done.
So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
I'm Greg Milam, and I'm Sky's Chief North of England correspondent. I've reported from around the world and around the UK.
I'm Mark Stone, I'm Sky's US correspondent based here in Washington, DC. And beyond the United States, from across the world, I report on the biggest stories.
I'm Stuart Ramsey, and I'm Sky's Chief Correspondent.
I'm David Blevins, and I'm Sky's Senior Ireland Correspondent. I remember some of the worst of the violence here.
I'm Alex Crawford, and I'm Sky's Special Correspondent based in Istanbul.
Well, European stocks have had a positive session after some solid trading updates across continental Europe today. And the MIB in Milan ending up in negative territory. Talking points today include Siemens Energy, the German power equipment maker, has risen by 12% in Frankfurt as its quarterly results absolutely smashed expectations, while Puma has risen by a similar amount, again in Frankfurt, for similar reasons. Well, here in London, the FTSE 100, having hit a fresh closing high yesterday, has done the same again today. The FTSE finishing up just under 0.5% higher amid broad-based gains. The leading blue-chip gainer in percentage terms was International Airlines Group, the owner of course the British Airways and Aer Lingus, up nearly 3.75%. That looks to be a bit of bargain hunting following yesterday's sharp sell-off. Another big gainer to mention is Informa, the world's largest exhibitions group. That raised its share buyback programme today following an upbeat trading statement. The share's up 2.25%. Not too many fallers to mention today, but BP has drifted another 2/3 lower after yesterday's results. Outside the FTSE 100, well, the big talking point this afternoon, of course, is Wood Group, finishing nearly 17% higher on news of that takeover approach, while OSB, that's the old one, savings bank, has risen by 5% on a trading update. Over on Wall Street, it's been a fairly insipid start to the session, to be fair. The Nasdaq, as you can see, off 0.25% there. Shares of Uber have fallen by 8% after unexpectedly reported a first quarter loss. To the upside, Reddit has risen by 4.5% just now. It was up as much as 11% earlier on. Its latest sales figures have beaten expectation. On the foreign exchange markets, well, the Swiss interest rate cut has been a major talking point, and that sent the Swedish krona down by 2/3 against the dollar and 1/3 or so against the euro. Sterling, as you can see, all the main currency pairs there, dollar, euro, sterling, all pretty much unchanged against each other just now. As for the oil price, well, earlier in the day, that fell to its lowest level since the 12th of March on a forecast of falling demand. It's since rallied. A barrel of Brent crude will currently set you back $83.74 a barrel. That's up nearly 0.75% on the session. Well, joining me this afternoon is Emma Wall. She's Head of Investment Analysis and Research at Hargreaves Lansdown. Emma, great to see you this afternoon. What did you make of the Swedish interest rate cut? I mean, a lot of people saying this is quite significant because Sweden's economy is not dissimilar to that of the UK.
I completely agree. So while it wasn't unexpected, so if you look at the sort of Bloomberg aggregate index of economist and analyst expectations, it was around 50% that they would cut today or June. But your point about the similar economy is an interesting one, because although the Swedish interest rate cut may not have a direct impact on us here in the UK, the ECB and the Bank of England will be looking to see the impact of this rate cut, firstly on inflation, but then also on things like, as you mentioned, the currency and what that could potentially mean for secondary inflation, so imported inflation, and indeed for sort of more periphery data points like PMI, like investor confidence. So Sweden's economy was in recession last year, like Germany, like the UK, a shallow one, but is predicted to have around 70 basis points growth this year, which of course actually is better than the expectation for growth for the UK. OECD coming out recently saying that it's downgraded growth expectations for the UK to just 40 basis points from 70. So it will definitely be one that central bankers are watching. We believe that actually the ECB and the UK aren't too far behind. Now, of course, we have a rate decision this week. We don't think it's going to be this week for a rate cut, but we think June is a possibility both for the UK and for Europe.
Are you expecting with the Bank of England tomorrow, Emma, a significant change in the composition of voting?
Yeah, I do think we will see a slight lean towards cut, one or two voters going for that cut. I don't think there'll be a wholesale difference, not least because I think central bankers have become far more aware of the indication that that gives to the market. You know, we are all now looking at that underlying data and indeed listening carefully to the Bank of England Governor Andrew Bailey when he stands up at that press conference. That forward guidance that central bankers give now is almost as important as the rate decision themselves. You know, we've seen the Fed use quite strong language about higher for longer and the impact that then that has on the T-bonds, you know, on the fixed income market and indeed on the stock market. So Andrew Bailey tomorrow will be very much, I think, cautious in his approach. But inflation is coming down, the trajectory is good, and the economy is not quite as robust as it is across the pond. So I do think it's a case of cuts soon, not never.
Indeed. Now, I know you've been doing a lot of research on how comparatively cheap the UK indices are to their international peers. And I guess we've had more proof of that today with a bid this afternoon for Wood Group.
Yeah, absolutely. And I mean, Anglo American, a FTSE 100 giant miner being bid for, in fact, in a bidding war for, is a great indication of quite how cheap the UK market is. Despite the FTSE 100 reaching all-time highs this week, we still think that the UK market is on around a 40 to 45% discount to the US market. Now, some of that is because we think the US market is slightly overvalued. But even if you take the developed market aggregate indices, we still think that the UK is on a sizable discount, maybe 30, 40% to its peers. And this is just, well, we don't understand this really because fundamentals actually are really strong. You know, you've got some great businesses with international revenues, quite high cash on the balance sheets with little or no leverage, kicking out great dividends, committing to, I mean, quite wild buybacks. Some of these commitments from BP, from Next, from Barclays, you know, they almost return all value to shareholders in sort of single-digit years. And we think now is a great time to be buying into that market. We will say, though, that there is volatility ahead, and that economic picture, as I mentioned, is not exactly positive, but on a sort of medium to long-term view, the UK looks compelling.
OK, Emma, got to leave it there. Great to talk to you this afternoon. Thank you. Just before I go, a few pictures to show you. Prince Harry's just arrived up the road from here at St Paul's Cathedral for a service marking the 10th anniversary of the Invictus Games. As you can see, it's a lovely sunny day here in the city this afternoon. Let's hope it lasts for my walk home later. Mark Austin's going to be up next with the News Hour. Do stay tuned for that. I'll see you tomorrow. Cheerio.